Inheritance tax can be a complex and confusing aspect of financial planning, especially in the context of estate planning laws, which may vary significantly from state to state. However, in Georgia, residents are afforded a unique financial landscape: the absence of state-level inheritance taxes. This distinctive feature of Georgia's tax system underscores the importance of understanding how federal estate tax laws apply to you and your assets. With the ever-shifting terrain of tax legislation, arming yourself with knowledge and strategic planning is key to safeguarding your estate's future. The basics of inheritance tax law in GA. Georgia stands out as one of the many states that do not impose an inheritance tax. This means that when a person dies, the beneficiaries of their estate do not have to pay taxes simply because they've received an inheritance. However, it's important to note that while there is no inheritance tax, there could be other taxes that affect the estate or the beneficiaries. The distinction between inheritance tax and estate tax. The terms inheritance tax and estate tax are terms that often crop up in estate planning conversations. They refer to two different types of taxes that can apply when wealth is transferred after someone's death. Here's a brief overview of how each one works. Estate tax. Levied on the estate. Paid by the estate. Based on estate value. Inheritance tax. Levied on the beneficiary. Paid by the heir. Varies by state and relationship. The federal estate tax explained. The federal estate tax, often known as the death tax, is a tax imposed by the U.S. government on the transfer of estates upon death. If the value of your estate exceeds a certain threshold, a portion of your assets could be subject to this tax. The assets in question can be varied, including but not limited to cash, real estate, investment accounts, and retirement funds. Estate tax exemptions for 2023 and 2024. For the year 2024, the estate tax exemption amount stands at $13.61 million per individual, effectively doubling to $27.22 million for married couples who can combine their exemptions. This is an increase from the 2023 figures, where the exemption was set at $12.92 million for individuals and $25.84 million for married couples. Thresholds and taxation rates. In practical terms, for the year 2024, estates valued at or below $13.61 million for individuals, or $27.22 million for married couples, are not subject to federal estate tax. Estates that exceed this exemption limit are taxed only on the amount above the threshold. The tax rate for federal estate tax is progressive, with a series of increasing marginal rates culminating in a top rate of 40% on amounts over $1 million. Additionally, beyond the initial threshold, there is a base amount of tax due, which is then increased by the marginal rate applicable to the amount over the threshold. Current legal framework governing inheritance in Georgia. Today, the legal framework governing inheritance in Georgia is characterized by the absence of a state inheritance tax. The state conforms to federal estate tax laws, which only affect estates that exceed the significant federal exemption amount. For Atlanta residents, this means that there are no state-level inheritance taxes assessed on the property or assets they receive from a decedent's estate. Applicable deductions. While Georgia does not have a state-level inheritance tax that would allow for deductions, there are federal deductions that can be relevant for estates that are subject to the federal estate tax. The federal tax code provides a range of deductions that can lower the taxable value of an estate. These can include marital deduction, charitable deduction, debts and expenses. Calculating federal estate taxes in Georgia. Understanding how an estate might be taxed at the federal level is an essential part of tax planning for Atlanta residents. Although there is no state inheritance tax, estates that are large enough may still be subject to federal estate taxes, which can impact the amount that beneficiaries ultimately receive. Step-by-step guide to calculating potential estate tax. Here is a simplified guide to calculating potential federal estate taxes owed. Determine the gross estate. Tally deductible amounts. Apply the federal exemption. Calculate the taxable estate. Apply tax rates. Account for credits and prepayments. Determine final tax liability. Georgia's stance on inheritance tax for non-residents. Georgia's tax laws are shaped by an understanding that both residents and non-residents may have interests within the state, particularly in a bustling city like Atlanta with its dynamic real estate market and business environment. For non-residents who inherit property located in Georgia, it's crucial to understand how such inheritances are treated under Georgia law and what tax responsibilities may arise. How non-resident inheritance is treated in Georgia. Even though Georgia does not impose an inheritance tax on its residents, non-residents who inherit property located within the state are also not subject to a state inheritance tax. This is consistent with Georgia's overall tax-friendly stance on inheritances. Real estate, bank accounts, and other assets situated in Georgia that are passed on to non-residents are treated similarly to the way they are for residents in terms of state taxes. There simply isn't a state tax levied on inheritances. Tax responsibilities for out-of-state inheritances. For non-residents inheriting assets from a person who lived in Georgia or owned property in Georgia, here are some tax responsibilities to consider. No state inheritance tax. Federal estate tax. Income generating assets. Capital gains tax. Other state taxes. Inheritance tax planning strategies in Georgia. While Georgia does not impose its own inheritance tax, residents and non-residents alike can benefit from strategic estate planning to mitigate potential federal estate taxes and ensure a smooth transfer of their assets to beneficiaries. In Atlanta, as in the rest of Georgia, careful planning can help preserve wealth and provide clarity for the execution of one's final wishes. Estate planning tips to mitigate inheritance tax. Although inheritance tax is not a concern at the state level in Georgia, here are several tips to potentially mitigate federal estate tax and protect assets. Understand federal exemptions. Lifetime gifts. Marital transfers. Charitable donations. Life insurance. Review beneficiary designations. Legal tools for inheritance tax planning in Georgia. Several legal tools can help individuals in Georgia plan for the future of their estates. Wills. Powers of attorney. Advance directives for healthcare. The role of trusts in tax planning. Trusts can be an integral part of tax planning in Georgia, offering a range of benefits. Revocable living trusts. Irrevocable trusts. Charitable remainder trusts, CRTs. Insurance trusts. Specialized trusts for business owners. Navigating inheritance tax with professional legal help. In Georgia, while the absence of a state inheritance tax simplifies estate planning to some extent, dealing with federal estate taxes and setting up the necessary legal structures to protect assets can be complex. Professional legal help can be invaluable in navigating these waters and ensuring that your estate is handled according to your wishes while taking advantage of all available tax benefits. When to consult an estate planning attorney. Seeking the advice of an estate planning attorney is advisable in various circumstances. High-value estates. Business owners. Out-of-state property owners. Complex family situations. Desire for privacy. Philanthropic intentions. Recent changes in the law. Asset protection. Effective estate planning with Trace Brooks Law. In Georgia, residents benefit from the absence of state inheritance taxes, but they must still contend with the federal estate tax, which can apply to larger estates. Effective estate planning is not just about deciding who gets what but also about minimizing potential tax liabilities that can significantly impact the value of the estate passed on to your beneficiaries. To minimize tax liability, it is crucial to have a strategic estate plan that utilizes exemptions, leverages gifting, employs trusts, considers charitable giving, plans for business succession. Take control of your estate planning. Contact Trace Brooks Law to explore how we can assist you in building an estate plan that protects your assets, honors your legacy, and strategically minimizes your tax burden. Allow us to guide you through the complexities of estate tax planning with our professional and detail-oriented approach. Schedule a consultation with top-rated Atlanta estate planning attorney Trace Brooks by calling 404-492-9559 today.